If you take the time to study markets, you'll come to realize that bear markets produce phenomenal opportunities. In this spreadsheet, I have a number of ETFs shown on the right-hand side, and the returns per year for each ETF are shown in the different columns. And right now I have the spreadsheet sorted by returns for 2008. And obviously you can see with the market collapse in 2008, the extremely horrendous bear market that almost virtually every sector went through that year. But what's noticeable is the following year in 2009, the phenomenal returns that were produced after the bear market in 2008 was over. And you'll notice that the most destroyed sectors, such as coal, Russian stocks, copper, Brazil, steel, industrial metals, etc., had some of the biggest returns. So the bigger the bear market, when the bear market finally ended, the bigger returns. Now next I'm going to show this spreadsheet sorted by returns for 2016. Now the difference between 2008 and 2016 is that really the end of 2015 was the end of a 4 to 5 year bear market for a lot of different sectors, and 2016 turned out to be a year of extreme bull market returns for those sectors that were ending bear markets. So for example, again, industrial metals, coal, steel, silver stocks, gold miners, copper stocks, Brazil, Russia all had phenomenal returns in 2016 as they ended their bear markets that were going on for a number of years. And likewise, what we saw was biotech, for example, was a sector that had double-digit returns for about 7 years going into last year, and biotech finally had a down year of losing over 20%. But what I'm really paying attention to as we start this year, obviously I've been talking a lot about uranium so far to start the year, and I started talking about uranium back at the start of December, is that in uranium we're seeing the end of a 6 year bear market potentially, where this sector was essentially just obliterated. And what's really interesting to me is that the uranium mining ETF was only down 1.5% or so about last year, but uranium metal was down something like 40% last year. So really there was significant outperformance in the uranium miners versus the metal for the year 2016, and that seems to be boding well so far for a lot of the breakouts I'm seeing so far in uranium stocks. But some of the other sectors I'm looking at this year besides uranium include the agricultural sector, because a lot of the agriculture ETFs like corn, wheat, still had double-digit negative returns last year and are really still in the midst of that 4 to 5 year bear market that most of the other commodities finally broke out of last year. So agricultural chemicals actually is something that I'm looking at, and you're already seeing a lot of movement in those stocks so far this year. Another interesting area is potentially is Mexico, where Mexico is working out a 4 year bear market, and there's been a lot of negativity in the media about Mexico with the current election in the U.S. and really it could be setting up a potentially good opportunity in that country, especially if the U.S. dollar finds a top sometime this year, where you have another currencies like the euro and the British pound that have undergone bear markets for multiple years now as well. So really the action in the US dollar is going to affect a lot of commodities, but a top in the US dollar could really bring strong returns for some of these commodities that are still kind of trying to emerge from bear markets. And one other sector that's just got destroyed last year was solar. Solar is kind of a weird sector where the returns have been either absolute destruction or you had an anomalous year back in 2013 where solar stocks were up over 100%, these two ETFs. So another sector to watch. I think it's still in stage 4 right now, but obviously it's been destroyed. And if the industry resumes a growth path, you could see a good turnaround in that sector as well.